So, what if the next time you applied for a loan, the decision wasn't made by a person at all, but by an algorithm? Well, that's not science fiction anymore. It's already happening. Artificial intelligence is poised to completely rewire the world of finance. But is this a story of trillion-dollar breakthroughs, or are there hidden risks we're not talking about? Let's dive in. To really get why AI is such a big deal here, you've got to look at the massive challenges it's supposed to solve. This map lays out the 11 biggest pressures on the financial industry right now. We're talking everything from the shift to a cashless world, with apps like Venmo, to the demands of everyday investors who have more choices and power than ever before. It's an industry that's being pushed to evolve from pretty much every direction. And all this pressure brings us to a really strange place. A paradox, really. You would think an industry so obsessed with data and numbers would be leading the charge on the AI revolution, right? But the reality is, their relationship with this tech is, well, it's a lot more complicated than it looks.
I mean, finance has actually been using some form of AI for decades. Way back in the 80s, you had early models trying to forecast market trends. Then in the 90s, AI became absolutely crucial for sniffing out credit card fraud. And by the 2010s, you were probably chatting with an AI bot for customer service. They were some of the first adopters out there.
But here's the kicker. Despite that long history, a recent study from Accenture revealed something kind of shocking. Out of 17 different industries, banking and capital markets are the least mature when it comes to adopting AI. So even though they use it, that use has been surprisingly narrow, and that's created a massive opening for disruption. And believe me, that disruption is here. AI is now being positioned as the ultimate solution to all those challenges we just saw. The promise is absolutely enormous, and the numbers behind it are just staggering.
For the big financial institutions, let's be honest, the biggest incentive is pretty simple: money. AI applications were estimated to save banks a colossal $447 billion by 2023 alone. Now, that is a powerful reason to go all in on this technology.
And just look at the sheer speed of this change. The global market for AI and fintech is absolutely exploding. It's projected to more than quadruple in just 5 years. The investment is just pouring in because the potential returns are way too big to ignore. And this isn't just about tweaking one little thing. AI is being deployed across the entire financial ecosystem. It's changing how our assets are managed by finding new investment patterns, how risk is calculated to prevent the next big financial shock, who gets approved for a loan by using thousands of new data points, and even how markets are predicted. It's a fundamental rewiring of the industry's DNA. The people on the inside, they see what's coming. A majority of financial advisors, the experts in the trenches, believe AI is about to have a revolutionary effect on their own profession, and they think it's going to happen fast. They know a massive change isn't just on the horizon, it's already here. Okay, so everything sounds amazing, right? A golden age of finance. But this is where the story of AI and finance takes a very sharp and often hidden turn. All of this promise, all of this investment, it's running headfirst into a pretty harsh reality. Remember this number? We've seen that billions and billions of dollars are being bet on AI to deliver these incredible revolutionary results. The hype is just completely off the charts. Now get ready for this. According to research from Gartner, a staggering 85% of AI projects simply failed to deliver on their promises. The vast majority of these expensive, high-stakes projects are just not working as intended. And this isn't just about a few glitches. It points to a much, much deeper problem. And here's that problem. It gets worse. Another Gartner analysis found that up to 85% of AI projects produce erroneous outcomes, specifically because of bias. So it's not just that they're failing to work, it's that they are actively making skewed, unfair, and potentially really harmful decisions. And this brings us right to the heart of the issue. When we hand over these critical financial decisions to automated systems, we're not just creating technical challenges, we're creating profound ethical dilemmas that could affect millions and millions of lives. The central issue here is something called algorithmic bias. Put simply, it's when an AI system consistently makes mistakes that hurt specific groups of people. For instance, imagine an AI is trained on historical loan data from an era where lending practices were discriminatory. Well, the AI might just learn those bias patterns and continue to unfairly penalize certain applicants today. The AI doesn't just learn our past mistakes, it can automate them and scale them up. So you see the core conflict, right? On one hand, AI offers this incredible data-driven efficiency and the promise of pure objectivity. But that relentless drive for efficiency can come at the direct expense of fairness. You end up with systems that discriminate, but hide it all under a veneer of impartial code. Then you have the black box problem. The most powerful AI models can be so complex that even the people who created them don't know exactly how they reached a decision. It's like a brilliant chef who makes an amazing dish but can't tell you the recipe. Have you ever been denied a credit card and gotten a really vague, unsatisfying reason? This is the high-tech version of that, a decision that impacts your life with no real explanation. And this leads to this fascinating and, frankly, dangerous idea called the moral crumple zone. Imagine a flawed algorithm denies a totally deserving person a mortgage and they lose their dream home. Who's to blame? The programmer? The bank? The AI itself? Well, what often happens is the blame falls on the nearest human, the loan officer who had to deliver the bad news. They become a scapegoat for a system they didn't really understand or control. Okay, so the promise is huge, but the peril is very real. The big question is, how do we move forward? How do we build AI systems that aren't just powerful, but are also fair and trustworthy? Well, the answer seems to lie in creating a whole new framework for responsible innovation.
To tackle this, researchers have proposed a really powerful new framework. It's called the EFT model. And it's a simple yet really comprehensive way to think about building ethical AI from the ground up, especially for the high-stakes world of finance.
It stands on 4 pillars. First, ethical intent. That means designing these systems with the explicit goal of helping people, not just maximizing profits. Second is fairness, which involves actively hunting for and rooting out bias in the data and the algorithms themselves. Third, transparency. We have to crack open that black box so we can understand and challenge its decisions. And finally, and this one is crucial, human oversight. Making sure that for the most critical decisions, a human is always in the loop to make that final, morally accountable call.
And this isn't just a theory. Here's how it could actually work. Let's say you apply for a loan. The system flags it as a high-stakes decision and automatically triggers an ethical checkpoint. If the AI detects a potential problem, like a high risk of bias or a decision it can't explain, it doesn't just spit out a rejection. Instead, it escalates your application to a human expert for review. It's about building ethics directly into the workflow, creating a real safety net for fairness. But look, making this work isn't just one group's job. It requires a shared commitment from literally everyone. Developers need to build fair tools, financial institutions have to audit their systems and educate their customers, regulators have to step up and set clear rules, and we, as clients, need to become more financially and digitally literate so we can ask the right questions and demand accountability in this new world. Which leaves us with the ultimate question. As AI becomes the gatekeeper for our financial lives, deciding who gets a loan, who gets a home, who gets a chance to build a better future, who gets to be the gatekeeper for the AI? That's the challenge we all have to solve, together.